worry about. If there's a reason not to own a stock, we don't buy it. If we have enough reasons to own a stock, then we do buy it. So, getting worried about late-stage basis and whatnot, that's not something we would think about. So, somebody says my screen is frozen. Is that true? Dr. K, is my screen frozen?
It's still on Hain.
Yeah, I'm on Hain. So let's go to...
so it looks okay. Yeah, I see cursor moving around.
So now we're on Fran. So it's probably your internet service. You probably have the cheap internet service. Maybe that's it. I don't know. Or maybe they're working on your internet connection down the street. Sometimes that happens to me. Francesca's had a nice breakout. This is a really volatile stock. I prefer cores if I'm going to be buying retail stocks. And so, I prefer the cores. But this, I guess, do you like this one, Dr. I think if it pulled back to, say, 33, somewhere around there, I might be more interested.
Yeah, it's not too bad. It's choppy. It's a retailer, and it's traditionally choppy, traditional retailing choppy pattern. So I'm not as interested in this one, but it has good fundamentals, and the technicals are sound.
Yeah.
So if you play this one, just expect it to retrace back to the 50-day at some point, because it tends these types of stocks tend to not obey the 10-day very well.
Yeah, I noticed earlier that Cirrus looked like it was working on a continuation pocket pivot today, coming off the 10-day moving average. Cirrus Logic, you guys can see it there, and it looks to me like that is the case. In fact, I think that is enough volume for a pocket pivot.
Yeah, that is. That looks good.
Let's see, 2322355 and. Yeah, it is a pocket. So that's a continuation pocket pivot right there happening right now as we speak. So that must have just started to pick up volume in the last hour because I was looking at that about an hour ago on my screen. So NSM. If you guys recall, last week during the webinar, the stock was up pretty sharply, but I pointed out something to you that you've had a long run. You go 2 weeks down and 2 weeks to new highs, and now you're running up here. That you might think about taking profits into that kind of a move, and you can see the stock is in fact coming in. So I think that you're looking at a situation where we talked about this last week, and it would have been a good reason to sell the stock. Now I just kind of leave it alone, and I can't tell you whether to sell it or not because we talked about that pretty much a week ago. But something to keep in mind, you have a stock that goes straight up and it has a big move. And then you go straight down for 2 weeks and straight back up to new highs, and the volume's light. And here you are streaking up on the third week. I think you just take profits, not rocket science. Much in the market come off a little bit more. Let's see some N. I don't know. NetSuite's always been a squirrely stock, I mean, it looks okay. It's holding the breakout, but it doesn't thrill me. RGR, I don't really care for this stock. There's never really a point to buy it. So, and don't know, is it a Head and Shoulders? It looks kind of more like a Head and Shoulders, but I don't really care much for this stock. So it's not even in any position to buy. Is it okay to hold FLT? Only if it goes higher. But, you have to assess this in terms of the objective evidence. What do you have? You have a breakout up the right side of a cup. You don't really pause a day or two to form a little handle here. You break out. So are you holding the top of the base? Yes. Is the volume heavy today? No. Is it finding some support off the lows today? Yes. Is it holding the 10-day moving average? Yes. So, after this kind of a move, it's just what Livermore would call action-reaction. You have to expect if you have a stock that has a sharp move to the upside, then of course it is going to have a pullback at some point. And so you have to gauge what would be a normal pullback and what would not. I would say in this case, for FleetCor, this looks like a normal pullback. My chart shows an AT, what the heck is that? An AT number, AT margin of 68.5 on DHI. Do you see the same number? What's AT margin? Oh, after-tax margin? I show 68.5% after-tax margin. I'm going to guess that the person at O'Neill who is entering in the data might not have adjusted that for for a one-time. I think there's some certain gains or charges in that number, and I think that might skew that number. So I doubt very much if they're suddenly realizing 68.5% after-tax margins compared to 4.2, 3.1, and 3.3 over the prior 3 quarters. What would you say that is, Dr. K? Do you see that?
Wait, you're looking at after-tax margin after tax
On
in the
on
quarter?
DR Horton, yeah, which had a pocket pivot yesterday.
Hold on a second. Yeah, that's obviously maybe it's a fat finger error or something like that.
Yeah, you have to remember that human
I don't
beings actually enter the data into these things,
actually,
so
no,
they
I
can make
see.
an error.
There's an earnings jump to 222, so it looks like a one-time situation that needs to be backed out.
Yeah, and
Because
apparently they did.
it's just
So.
soars to 222.
Yeah.
And that clearly is not going to keep that momentum going. So that probably explains why you have that kind of margin after tax. So yeah, I'm surprised they didn't back it out, but maybe they couldn't. And if you looked at the details in more carefully, then you would see why they couldn't back it out. But to know that it obviously is not going to be sustainable.
Somebody's asking about SPLK. Okay, just going by the question. There's some
question. A fairly
somebody's
extensive
saying,
question.
well, let me read through the question here. I've been watching Splunk since its IPO, although it announced selling additional shares July 16th. The stock seems to be carving out a bottom. It appears to have had a pocket pivot 2 days ago. I guess you could call that a bottom fishing pocket pivot, yes. I don't know if that's 2 days ago. It looks like you had it right. This is tough.
It wouldn't be a pocket pivot.
Guess it would be
It misses by 1 day.
Yeah, didn't make it. It actually didn't have a pocket pivot. I want to test this. Wait a minute. Where did I go? I can't. I want to test it on the long side, or do IPOs need more time to base? I just want to know if there are any studies done on the probability of continued price appreciation when an IPO rounds out a bottom and then pocket pivots off the compression of the 10, 20, 50 DMAs as the stock is doing. I don't know. I wouldn't get overly fixated on so-called studies and probabilities. I think when it comes to stocks, a lot of stocks just do their own thing, and you have to assess them on just more than the technical action. You also have to assess them on the fundamentals, but also the thematic basis for the stock. Now, Splunk is like the Google for the business area, for businesses rather, and maybe it's some hot to trot new name, but they're losing money hand over fist, and the stock price to me doesn't look like it's necessarily setting up in the base. If we look at a weekly chart, I got to kind of mess with this to make it even look. This is just really loose, and so it should tighten up. I would think if it's going to be any good, it'll set up in some kind of a cup and a handle in here somewhere, and then try to come out at that time. But right now, I don't really see any point in bothering at this when there are other stocks that are much better. Cass is a CNBC commentator and hedge fund man, mostly bearish. Okay, I mean, I don't, maybe he's really smart. I don't know, but I don't really see what he sees right now. If I do, I'll sell. I don't really care for this stock, SWKS. It's kind of a laggard, minus 8% earnings growth, so it doesn't even really hit my radar. Somebody asked this question, Dr. K. Wouldn't you expect the VIX to be low and stay low if the market trends higher? Yeah.
Absolutely.
In fact, a market rally, a very strong market rally, will actually be characterized by the VIX moving quite a bit lower. And so, yeah.
But that doesn't mean it goes down every day. And if you look at prior market uptrends, you'll see that the VIX has a general downtrend, but that doesn't mean it goes down in a straight line. So what we're seeing, the action we're seeing today, this pullback, I think is constructive, and we're also seeing the VIX go higher, which I think is also, in a sense, it's all very constructive, because I think the VIX is potentially, well, it isn't a downtrend, so it's having a minor uptrend in a major downtrend, and the market is having a minor pullback in an uptrend.
So I wouldn't pay too much attention to that. Dr. K quickly mentioned AGU last week. Could he give his thoughts this week? You mentioned AGU last week, Dr. K?
I think we talked about it, yeah.
We talked about some sort of pocket pivot.
Right. and AGU has had a number of pocket pivots, and basically this is a stock that this whole group has been trying to reassert itself, but I would be careful because again, there's better names out there. It's a commodity stock, and commodities have been showing signs of life. So maybe take a tiny little position in this, but I think there's better options out there. Earnings and sales have on this one have both slowed a little bit, and the industry group, which was ranked 16th, is now ranked 55th. That's as of 16th as of a week ago, and then it went back down to 5. So I'm not real crazy about these types of names right now because I don't see a whole lot of upside time value in these kinds of names. I think there's better opportunity in other vehicles.
Right. The other thing to keep in mind here is this thing has had a pretty much straight up move off the lows, and so it seems to me that given this big move, it's not just going to continue higher, but it's probably going to need to go sideways. And I think that may take a back seat to, say, the NASDAQ stocks. Some of the tech stocks are acting okay. So I think that that's something that probably needs to take a break, needs to rest for a while. And so on that basis, I would probably be looking to go elsewhere. So somebody asked, how do you deal with the liquidity issue in DGP? Well, we don't really buy DGP. As we talked about earlier, we buy AGQ, and AGQ is a lot more liquid than DGP. If we're going to play gold, we probably would go with GLD, although I don't really see that. Do you see that as a big problem if you wanted to buy DGP, or if we wanted to, Dr. Ken, we needed to buy 50,000 shares?
With something like, yeah, it shouldn't be a problem.
No.
Because of the way the markets are made in these vehicles.
Let's see. Let's go look at Z. Zillow, it's just holding the 50-day moving average. Kind of a laggard, though. It doesn't really thrill me. Let's see. Pushing through some of these other questions. Lumber liquidators. The light volume pullbacks coming right to the top of here. I guess it becomes viable around 44 maybe. So, but your housing stocks have been acting well. Toll Brothers is moving higher the last few days. DR Horton rather had a pocket pivot. Home Depot's been turning. So I think the group looks pretty good. There's another one, FBHS Fortune Brands, is trying to hang in there on a recent breakout. So they're okay. So, but we kind of know where we want to be right now. Some of the stocks I talked about at the outset of this report. Is yesterday's high volume reversal in eBay a reason to take profits? No, the stock actually was up yesterday, so I don't really see that as a reason to take profits per se. And remember, we talked about this earlier. Look at Apple. Back here, you had a high volume reversal. Was that a reason to take profits? No. So, I think you got to look at where is the stock in its move. It's had a nice uptrend. It's pushing out of this channel. It probably makes sense for it to back up a little bit. The market's coming in a little bit. That's probably what's going on. So I wouldn't get too worried about it one way or another. Let's see, looking at some other names. KNXA. Connexa. I don't know. I don't care for this name. Do you, Dr. K? I mean, it's straight up off the bottom. I'm not sure what the traction here is. It's a very thin stock. So, man, decent earning.
I'm not real. I don't like the pattern in general. I mean, it had a gap up there, but it's a bit of a sloppy pattern. And again, it's a small cap, so I'd rather avoid it in this kind of environment.
So, I don't know. Maybe it goes higher later. I don't know. Maybe it needs to set up. Thoughts on now? Everyone should remain in the now. That's what I think. Thoughts on now? Service now. Another little thinny, so I don't really have any thoughts on it. It doesn't even hit my radar screen. There's no real base. Here's a little flag pattern. Company's losing money, minus 250%. Losing money hand over fist. Earnings growth, minus 3. So there's really nothing here at all that I'm interested in. Sorry. I wish I could love all stocks, but it just doesn't work that way. Let's see. Pushing through, let's see, Cubis Pharmaceuticals. This is one we never really think about because it's just kind of erratic and, I don't know, it doesn't really thrill us. You like this one, Dr. K?
CBST.
It's a snoozer.
No, I mean, there's better names out there. I mean,
we like this one. Look, and it's pulling
The earnings last quarter were really they accelerated quite a bit, and the industry group is great. It's ranked second, the biotech. So, but again, there's better biotechs out there than this one.
Yeah, I
But
think we like
again,
to on better.
if you want to diversify your portfolio out, if you like having 12, 13 names, or whatever, then you can take a small position in this, and if it doesn't work, I wouldn't keep your money in this because it just doesn't look like it's a big mover here.
Yeah, somebody asked Dr. K if you could comment on the European debt situation. It seems very quiet lately.
Everyone's on vacation.
Europeans go on long vacations, so they could probably just leave their problems on hold and just take vacation for 3 months. So
August is like notorious for vacations in Europe, and so I think that the trading desks and not a whole lot happens, and so the news is going to be on the light side. But of course, that's not in general. If there's any particular major crises that occur, then you're going to hear about that. But as far as the government and operations within the government, I think it tends to be a slow period of the year.
a couple other names, TFM, Fresh Market. I don't know. This one doesn't thrill me either. It's kind of a thinner name. Tends to be volatile. It's still holding the breakout so far, so that's about all I can say about it. I have no magic recommendation to give. CRM, I toy with the idea of maybe the stock's a short. In this market, I think you're better off being long than short, so I don't think I'm really interested in buying it or going short or doing anything with it. So don't really have any thoughts on it. If you think it's extended here and it's going to blow on earnings, then you could short some 10% position and see if you get lucky. But to me, that's just playing earnings roulette. Wouldn't you agree, Dr. K?
Exactly.
Let's see, we got 10 minutes, so I want to plow through some of these other questions. Cadence Design Systems. I've thought of this as a laggard, $12, $13 stock. It's an old name, so it's been around for a while. I remember this one, I even think I remember this one from like 95 back then. So, but it doesn't really thrill us. I mean, it's coming up, breaking out of a base, but $12 stocks don't thrill me. I like $100 stocks. The higher the better, I think, because it means it's institutional quality. This is still junky to me on that basis. So now that I said that, it'd probably go to 30. So PDF Solutions is another thinny. Again, a $12 stock. It's running up. Do I have any thoughts on? Well, it's extended. Probably if you bought the breakout or the pullback after the breakout, you're doing fine. But other than that, I don't really have any thoughts on it. So, I mean, there are decent earnings growth, but why isn't the stock higher? So maybe it's okay. I don't know, but it's too thin for me to play in any case. Trades about 110,000 shares a day. So we can actually go up there and push it up another $5 for you if you want us to. But we may have to charge for that service. Well, yeah, we might end up doing jail time with the SEC on that one. So forget it. I think we'll just steer clear of that. Mentor Graphics, another cheap teenage stock. Doesn't thrill me. Nothing going on here. I think if you're going to be in this type of name, 3D is a little better. I think fundamentally there's a better story, as well as SSYS, Stratasys. Those are better stories, so I think I like those in this area. Cray, these aren't even stocks we look at. I wouldn't touch this with a 10-foot pole either. $11 stock is junk. So you had a big gap up here, but nothing really happening yet. No, it's now back below the 50-day and testing the 10-day. So 10 days drop below the 50-day. I don't know. I can't say that that's all that exciting. Are there any IPOs sparking your interest currently? No. How about you, Dr. K?
Not that I can think of. All the
We've
stocks
seen
that I'm
something out.
looking
Not
at
really. Nothing really right now. If they show up, I mean, we'll see pocket pivots. We'll see other action that will tell us these things look good, and that's basically it. So I haven't really seen anything that sparks our interest, outside of the technicals. Did Ego have a pocket pivot? I don't know about you guys, but my Ego is pocket pivoting every day. Just ask Dr. K. Anyways, Ego, no, I wouldn't touch Ego with a 10-foot pole. I wouldn't touch gold stocks. You don't need to own gold stocks. Why do I need gold stocks when I can own a commodity that is actually a straight play on it. You know, too many of these gold companies, they still hedge. They engage in hedging activity. Some of them have stopped doing that. But I know there was some company, I forget, maybe it was Royal Gold or some other gold miner, saying that they were reinstituting hedging, and that, you know, they're probably doing it at the exact wrong time, and maybe that's telling you the stock prices or the gold prices are going higher. So I would prefer to play silver and gold. So, and we like silver better right now because we think you get better leverage on a move in precious metals, and lo and behold, that is what's been happening over the past 4 days. So that's where we'd rather be instead of playing the gold stocks. Did you remove Equix from your watch list, Gil? I don't know. What makes you think that I did that? The stock had a pocket pivot last week, and we talked about it somewhere in here in our report, and it's held. So there's really nothing else to say about it. So I think you might be talking about another report that I write where I didn't mention it last night. But I didn't think there was really any reason to. Stocks come up, so. But there's no reason for it to come off the watch list. It looks great, and I think it's one of the better stocks in the market right now. So, and to me, this also, you know, their server capacity. So they own these sites where they're basically server farms, and they're thinking about going to REIT status, real estate investment trust status, because they're more real estate in terms of these server farms, these facilities that hold these server farms, than they are a tech company. But I think this all plays into cloud capacity, network capacity for the cloud and whatnot. And I think that other stocks that have fit into this theme are racks. I think even Amazon, I think that's the real story in Amazon. And that those who are bearish on Amazon because they consider it to be ridiculously overvalued are really missing the point on Amazon. And I'm going to just kind of go off on a little tangent here, because if you look at estimates for Amazon going forward in 2016, and I know that's still 4 years, but if you have kids, you'll know that that goes by faster than 3 blinks of your eyes. They're going to make $11.71 estimated. Okay, in 2012 they're looking at 77 cents, but the turn in earnings will occur 2 quarters out. Next quarter they're looking to lose 8 cents. That's an estimate. But then after that, earnings jump to 55 cents. That's a 100% quarter-over-quarter increase. Then you're looking at 48 cents, which is 127. I'm sorry. Let me look. I got these numbers incorrect. The next quarter they're going to lose 8 cents. That's a negative 157% earnings growth. Okay, but next quarter they go to 45% growth on 55 cents, then 71% on 48 cents, then 4,500% on 46 cents, and then 475% on 30 cents, and then 100% on $1.10. And that's going out 6 quarters from now. So there is a turn in earnings coming. And on a forward basis, Amazon does a lot better if you're looking at a year or two in terms of the PE. And everyone wants to cite the ridiculous PE, but it's simply telling you what the market values the company's earnings stream. And right now, the market obviously sees something in Amazon, or they would have sold it off a long time ago. And it's looking at the forward earnings stream. And that's really what it's all about. So I think a lot of people are missing that. And I also think there's a stack concept, and that's really where Amazon may see some growth going forward. So I think that that's really what's driving these stocks. I think Equix, you could throw it in there too. I think Equix, if they do go to a REIT, REITs have been doing pretty good. Simon Property Group has acted pretty well recently, and that's probably another positive for them. But Dave, it's still on my watch list. By the way, did you get married yet? Is the new book on sale yet? No, it is not. It's going out. In fact, yesterday we approved the cover. Let's see. We're getting Mr. Morales. I hate it when people call me Mr. Morales. It makes me feel like my dad. Mr. Morales, didn't you buy Coors clothes? If so, any new fashion? Oh, my daughter loves Coors clothes. She thinks they're the greatest thing out there right now. And but she actually talked about how she would like to start an entrepreneurial business, and she was citing examples. And I thought you might mention Apple, but she didn't. She mentioned Coors, Michael Kors Holdings Limited, as she said to me. And I'm thinking, wow, how did you know that? And so she's into it, and no real updates other than that the clothes are still hot. What service do you see for quarterly earnings estimates? Well, you can look at, you can go to Yahoo Finance. I think they have Zacks or something, but we use First Call, and we actually pay for that service. Are we going to be conducting any webinars in Spanish? No, and that's actually no in Spanish, just so you know. Any thoughts on Van Tharp and his peak performance course? What's that, Dr. K? You know?
Say that again?
Van Tharp and his peak performance course? Can you be more specific?
I'm not aware of any course called Peak Performance, but Van Tharp is well respected in the business, and I think he wrote one of the forwards to one of Jack Schrader's books. So I think he's valid. I think he's he deserves the reputation he has. So I would look more into that specific course if you're interested, and Google the name of it, and you might be able to come up with some specific information as to whether it's worth attending. But I know I've read some of his work, and I do respect it.
Okay, I've never really heard of him, so I don't know. I'll tell you a story about all these courses about peak performance and achieving this and all this other stuff, and you got Tony Robbins, and people are always asking me about that. And then I think there's what's that? What am I thinking of? Who's the guy? Dianetics or something like that. I don't know. All these different courses. And you know what? I remember when I was a broker at Merrill Lynch in 1991, starting out as a broker. And it seemed like all the other broker trainees had their little, self-improvement course and books and, become everything and visualize everything you're going to be and blah, blah, blah. And I got to tell you, out of 20 people in my class back then, I'm the only one still in the business, and I didn't really read any of those books. I read one book, which it was, I forget the guy's name, but it was called How to Sell Anything to Anybody. And basically, as a broker, you're a salesperson, and it's all about getting your butt on the phone and doing the numbers to build a book of business. And that's what I did after a couple, 3 years, and then that all took off, and I was $1 million producer in about 3.5 years in the business, which I believe is a record. At least that's what Donald Marin, who used to be the old CEO of Payne Weber, told me at the time. But, to me, it's like I wouldn't get hung up on all these courses about peak performance and, real self-realizing and all this other baloney. Just do it. Maybe read a couple of books on it, but then focus more on just doing it. And I find a lot of people want to build a library of self-help books. And I just saw that phenomenon when I was a broker. All these guys were buying books or taking this course on self-improvement and reaching your full potential, but they're all out of business now, and they never achieved any kind of success. And I really think it's just all about, ultimately, success in the markets is a lot about hard work, and a lot more so, in my view, than diet. And I think a lot of that stuff is good stuff. You do want to be in good health, and I think diet is very important on that basis. But in terms of becoming a good trader, focus on studying the markets. Focus on studying what the market is telling you. Focus on studying market history, and focus on building your sense of what the market context is, rather than some idea that you're going to eat some vitamins or some magic greens that you put in a juicer that are somehow going to make you a better trader. I just don't see it any more than any other profession. It all comes down to rolling up your sleeves and just doing it. So on that note,
but I think that I'm going to jump in here. I've seen hundreds of cases, and that's probably a microcosm of the actual number of cases that exist, of people who they didn't have the direction, they didn't know, they weren't on track, and if they picked up one of these books. I mean, I can tell you, when I was 19, I picked up one of these books, and it did fill in the gaps in terms of my knowledge, and connected the dots for me. And those are lessons that I practice to this day. I think the key, and I agree with what you're saying, that I think people get a little bit too wedded to the whole concept of, oh, let's buy all these feel-good books and keep reading them. I mean, they're all the same. A good book is a good book. Same with spirituality across the board. All these different books on spirituality, they're all excellent in their own way, but they all say more or less the same thing. I think everyone should pick up a book, a Tony Robbins book, if you haven't, or a book on spirituality like Eckhart Tolle, and read through it. And I think you'll get a lot out of it, especially if you haven't read anything like that, and then apply it to your life. That's the key, is to take action and start applying it. I think a lot of people they don't apply what they're reading, or they learn it, they understand it on an intellectual level, but they don't actually apply it to their life, and then it's useless. So I think this Van Tharp, he's a respected guy, and if you've never done any course like this, or any of these trading courses or self-improvement courses, then try your hand in one. But really the key is to apply the concepts, and not just for the next 6 months, but to make them your own, make them part of your life.
Right, and I think my point is that, because I read a couple, 3 of these books, maybe more, but what I found is when I was a broker and starting out in the business, I read one good book on sales, and that's really all I needed, because he did have all these things about, visualizing and psyching yourself up, and, mentally creating images of success and being positive, and all these other things. Napoleon Hill also had some great books, How to Start Living and Stop Worrying, I think was a very good book. But what I would emphasize is, yeah, these things are great, just don't get trapped in this world of having to just have all these self-help books. So what you should do, I think, is like Dr. K says, read a couple of these, couple, 3 of them, but then I think focus and force yourself, literally force yourself to implement whatever these books are telling you, so you can find out whether they really do work. But you really got to put it in practice, and that's really where the rubber meets the road. So, but I think, Dr. K, we both agree that the works of Eckhart Tolle, I don't know if I agree with you on Tony Robbins. I met Tony with Bill O'Neill, I think, back in 2003, so seemed very hypey, I guess.
Well, I'm biased because he was one of the I think he was the second or the third book on this type of stuff that I've ever read, and I mean, it made perfect sense, and I started applying it. And I mean, some really basic stuff actually, but when you're when you're still in college, you might not have connected all the dots when it comes to this. So I found his stuff is well worded and easy to absorb and easy to apply. And so I'm biased in that sense. But again, you don't have to pick up Tony Robbins. You can pick up, there's a lot of guys like him out there that all say the same thing.
Yeah,
and it's good information.
Like Eckhart Tolle, or am I saying that right?
I'm not sure. I think I always heard Eckhart Tolle, but we're probably mispronouncing it because he's German.
Probably,
so
we're just dumb Americans. What do we know, right? And you're just a dumb American.
Actually, it is Tolle. It would be Eckhart Tolle. Yeah.
Okay, so I like the comment coming in, and I'm going to close on this. Ross Haber says, somebody asked earlier, we're going to be doing webinars in Spanish, and Ross suggests this. Press 1 for English, press 2 to disconnect until you learn to speak English. And I think I'm down with that in any case. That's all we got for now, you guys. So you know what we like, and we're kind of in them ourselves, kind of watching the REGN pull back. Remember, this is a volatile stock, so it does come in, but you do have some overhead from the left side here, don't forget. So that might come into play, but I think it's looking okay so far. So you can buy it; it's within range, and other stocks are looking okay. But the indexes are coming down, and that seems to be what they need to do at this point. You probably need to work a little bit of this bullish momentum off. So it looks like a normal pullback. We think you should be opportunistic on pullbacks and buy leading stocks if that's how you're oriented. Otherwise, wait for that hint of strength, as you could have done yesterday with Regeneron on the pocket pivot, and you could have bought it yesterday, and today you would be well rewarded. So that's it, and we'll just focus on trying to bring you the best ideas in real time. We'll talk to you guys next week. Everybody take care, and thanks for listening.
So long, everyone.